Here's this Google top right now going into the close, but let us not forget we're just measuring what it's like to take out a diamond resistance high, right, Mr. Mantok?
Right.
We know that this only occurs if the current ratio at 1.63. You cannot break and get above there on a closing level and break it. This has to go and challenge that 1.68, does it not?
It does.
But then when it falls down to 1.60, you get a little teeny retracement, right?
Right.
So the thing about removing emotion is to understand the price action clearly as to what this means, and that we're at the high of the range of 1.68. So naturally, because of the amount of breakout that we've already did in this name today, which you were part of, is that true?
Yes, that's true.
And you were involved in this whole breakout, weren't you?
The whole thing, yes.
Yeah, and you were doing short trades. And when the thing came down today and we made these bottoms, we had that long breakout, did we not? And we're finally at 12:55 p.m. Pacific Standard Time. And the calls paid off wonderfully. And the price action and everything that you've learned in that bid and ask has lived up to its entirety, has it not?
Oh my goodness, yes.
Right. Whereas Monday they had marked the equity down based on the European news, right, on gap downs
yes.
in the futures, and took all the premium out of everything. Took the stock down to all-time lows, and then the buyers have stepped in, and it's quite clear, Mr. Mantok, to you, that when the diamonds are closing on their highs, that's when the equity price is very strong and continues to make several highs because of these diamonds are closing toward the price action highs. And all day long, you've watched where they tried to sell the teeny bids down, but when that stopped, they immediately went the other way. And we've continued to make higher highs all day, have we not?
That's a fact.
As a matter of fact, didn't I tell you that look at the highs. 261 highs versus 49 lows. And why would that be verified is that your application tells you, because of the way the diamonds are printing, and they're ascending in value, right, Mr. Mantok?
That's correct, yes.
Right. And when they sell down the bid side of the market, that's this side of the market over here, and they sell the bid down, that's what these pullbacks are, right, Mr. Mantok? Right. But once that bid stops and they snap that green action bar right back on it, and them diamonds start going up, and it doesn't want to go lower from that pullback, hey, we've had total teeny breakout expansion all day. And pullbacks where they try to sell the bid down. See how they just tried to sell them prints down? Okay. And how do you know that? Well, you just come down here and you look at how they're selling these prints down and how they got to snap back on that buy side, right? To take out those diamond highs. Here, let's blow up that resistance level. And here it is at the end of the day. There's 3 minutes left. And the diamonds, the body is lower than that last diamond high, but it's midpoint right across all these diamonds here and now. So what does it mean? Are people selling or are they buying? We have $101 million money flow and 261 intraday highs, and your bid pops here in your diamonds confirm it. So every time they sold that bid down, you were popping right back up in here, and this occurred in breakouts all day long.
It did, all day.
And here's the last breakout right here. So we're quite happy, we're quite pleased that the price action was confirmed and that the highs would be challenged on the Google trade all day. And then, of course, we did the $580 calls, naturally. That put side, they finally marked that market down 690 today, like I was talking about, right, Chuck? So if they marked that market down, you were going to mark up in that 580 call, that 585, and that $600 call that's over here that hit 610, printed right now on the high 1040s and all. So the call side of the market was getting marked up today, right, Chuck?
It was. What a day it was.
And it was all based, though. It was all based on how that market was going to get made and how these resistance levels were going to get taken out and where that commitment was where they couldn't sell down the bid any longer, and that's when you knew to stay net long.
Right.
Because they marked it down on Monday in pre-market futures, and they marked it down really big on Tuesday of this week, as you recall. And so the thing about directional price movements is once that markup is always to be bought when they mark them down. I mean, Google didn't have anything to do with that news, did it? At all. But what it had to do with? I mean, it was part of the scam of using the Europe deal and gapping the futures down big overnight from their market selling off tremendously, right?
Yes, very much so.
Okay. And the market could still go down, couldn't it? And we would know if the diamond started to go down just the opposite way that they went up to the highs, then we would know that we would be on that side of the trade, right? Look at the put option, that 590 put. They took that from, you sold that today at $7.70. Or approximately now that they're trading at 99. Yeah. All right, here's that closing bell. Let's see if they're buyers or sellers. There it is. We have a price print of 597.46. Once again, we're going to recap Google trade today. And that whole trade was here on the $600 call. Got down to 25 cents. The other ones that we're going to cap, again, is the 390 call. We got to the 650. We closed up here nicely. There was a big buy right here. $374 million on Apple on the closing bell. So we're going to conclude the Google. I'll do an after hours market recap. We'll talk about the big gains today, why they were going to be made, what the headline volatility was, and how to trade headline volatility in the next segment.